What makes a business model immortal? It usually has three traits: consistent demand, pricing power, and defensibility. Consistent demand means people need it in good and bad times. Pricing power allows companies to raise prices without losing customers. Next, we have the subscription model, where customers pay regularly for access to products or services. Think streaming or software. This model provides predictable revenue and high customer lifetime value. But be cautious. If customers leave quickly, the model can collapse. Next is the picks and shovels model, investing in businesses that supply the tools, not the trendy ones. Examples include selling tools to creators instead of becoming one. This model benefits from everyone in the industry. Then, businesses that sell essential goods, food, water, and healthcare, are the ultimate boring businesses. These companies grow slowly but consistently, compounding into serious returns over time. Now, we dive into platforms, connecting buyers and sellers, creating value through network effects. Platforms can scale quickly, but they are risky early on. Invest when they are already established. Finally, brand loyalty creates powerful emotional connections, allowing customers to ignore competitors. Strong brands create pricing power and long-term stability, turning ordinary products into premium ones. Great investing isn't about predicting the future, it's recognizing patterns that withstand the test of time. Focus on business models with recurring revenue and essential demand to tilt the odds in your favor.